All right, good morning, everyone. It's Dima Khoury with Compass in Burlingame. I hope you're having a safe and healthy shelter-in-place holidays. I'm not sure how we're going to do the Christmas shoppings, but let's see. So today is December 19th, and I'm going to bring you the most recent real estate update for San Mateo County. And we're going to talk a little bit about the forbearance market, interest rates, and the difference between today's market and the last recession during 2008. So to start with, there is great news for the buyers. I'm sure you know if you are in the market, which is going to lead also to great news for sellers. So the interest rates has gone down more during the past week. So we're now at 2.61% for interest rates. This is really great. And there are some more properties that are going on the market, but not as many as it doesn't match the demand. So it's a great time to sell, to put your property on the market if you're thinking of selling. And so the market is more towards a seller's market. So again, it's a great time to buy and to sell. Now, let me share my screen with you, and let's talk more about what's the difference between today's market and during 2008 recession and before, and what led to that recession, because there are so many questions from homeowners on whether everything that's happening is going to lead into another real estate crisis. So I guess I mentioned this before. So a recession doesn't mean a real estate crisis. So looking at the facts now, the annual home appreciation, price appreciation prior to the 2008 crisis, uh, it was at 2000 at 8.6, 2001 6.5. This was the lowest. And then looking at 2.4 to 2004, 2005, it was 12.5% and 11.4%. Now looking at last 6 years appreciation, we can see that it is kind of neutral, normal appreciation, which is started at 2014, 4.4, 2015, 5.2. The highest was 2017 at 6.4%. And in the Bay Area, on the peninsula, and in San Francisco market, we have experienced higher appreciation than these numbers. Now, looking at the inventory level during the crisis and throughout the previous years, so 1999, it was low at 4 to 5. Now it jumped up above 7, so it was at 12 and even 13 during the crisis, 2006, 7, 8, and even 10. And it started to drop back. Now, during today's market, we're still at a very low home inventory level. So again, this reflects a seller's market. And the good thing is that with the interest rates, it is also a really good time to buy. Yet the buyers will have to go through multiple offer situations, multiple bids. So they have to be very strong, very competitive to be able to get in contract on their dream home. Now, looking at this is another very interesting fact and piece of information. The total home equity cashed out by refinance in billions. Now, previously, 2005, it was at 263 billion, 2006, 321 billion, and 2007, $240 billion were cashed out by refinancing by homeowners. Now, looking at today, or during the previous 3 years, we had 2017, 71 billion, 2018, 87 billion, and 2019, 89 billion. So the total during the previous 3 years is 247 billion in comparison to 824 billion. So these are facts that answers the question on whether there will be a housing crisis or crash or not. And these are all very key indicators that would, like, if the numbers change, it could lead to a crisis. But all the numbers that we see are very healthy and very strong numbers, and supports the housing market. Now, one more fact, which is 58.7 of all homes in America have at least 60% equity, which is very strong. Now, obviously, that homeowners have learned from the previous crisis, and now they're playing it very safe. Now, 42% of the homeowners own their homes free and clear. So these are very good numbers and healthy numbers. Now, looking at the home price change during the last 6 recessions, so 2019-80, it was the home appreciation was 6.1%. 1981 recession, 3.5% the home appreciation. 1991 property values went down 3%. 2001 6.6% the home values increase, and 2008 was a big number, which was a 19.7 or almost 20% on average in the US. Now 2020 we're at 7.3%. So that's, again, that's looking at the history, not all the recessions lead to a housing crisis. Now, going back to the forbearance, and this is new numbers as of mid-February or February 17th. So we can see that the initial forecast during the summer of 2020, the forecast was at 30% of homeowners to be in forbearance. Now, the actual peak was 8.6%, which is great difference. And currently we're at 5.5%. So obviously there was a lot of pessimism, and I mean, it's reasonable to think that there could be a housing crisis, but going deeper and looking at the facts, it is not. Now, looking at the progress of the current homes that are in forbearance or with homeowners, now the 6.5 million families that were granted the forbearance, 2.2 of them have extended their forbearance. 48% or 2.5 plus 625 have paid their mortgages off, removed while performing, or paid off mortgage. Now we have active forbearance still, it's almost 500,000, and we have 434 and 116, they're expired, delinquent and in loss mitigation. So we can see that the majorities are still in a healthy position. Half of the 6.4 or 6.5 are done. The other good big portion are still in forbearance, and some of them have extended, others are still within the same terms, and we do have a group that are unfortunately expired and delinquent. But this shows us the percentage of who paid off or who's delinquent or has expired. Now going back to San Mateo County. So let's see how's the activity doing. Now, from all the numbers that we saw, it's obvious that there's less inventory, less homes coming on the market. So it's becoming more of a seller's market, although it is a seller's market. It has been for the previous few months now, and this is reflected in the numbers. So for the past week, we had 62 properties that came on the market. In comparison to previous week, we had 82 properties in total, and this is almost 24 or 25% less. So during the previous week, and obviously this is during the holidays, 25% less properties came on the market, and 40 of them, of the 62, are single family homes. Now the properties that went in contract are 85, and 62 of them are single family homes. And the number of properties that sold or closed escrow are 110, and 82 of them are single family homes. And the total number of properties that came off market are 62, and 43 of them are single family homes. So again, we can see that there is a drop in the level of inventory by almost 25% than previous weeks, and that's during the holidays. Let's see how this coming week is going to look like. Now, looking at the absorption rate, which is, again, the artificial equation that we use to try to predict how many days or months it's going to take all the properties that are currently on the market to sell, and that's based on what is already in contract. So looking at the previous week's number, all the properties, it's gonna take 29 days only to sell all the properties that are currently on the market. So currently we have 366 properties on the market. It's gonna take less than a month to sell them all. That's due to the huge demand on the market. And there are currently 379 properties are in contract. So this is really a good number for sellers to look at and to consider going on the market if they're planning to sell. Now, let me share my screen again with you so that we can look at these numbers and comparing them to previous months. So far December, we are still, we're more than like 19 days in December. We have more than 200 properties that came on the market, but obviously it's lower than September and October, and that's during the holidays. And in comparison to last December, so we're definitely more than last year's December. So we're almost double. Last year it was 100 and probably 50. Now we're 250. So it's definitely higher. And looking at the number of days on the market, or how many days it's taking properties to sell on average. So in December, the number has slightly dropped since last week. So now we're at 29 days, and it is higher than November, yet it's still a very healthy number. Now, comparing this to previous year, last December, it took properties 37 days to sell. Now, today we need 29 days, which is quicker. And again, the reason for that is the huge demand on the market from buyers, which makes a lot of sense. Interest rates are very low. This means that there will be more savings throughout the years, thousands of dollars. They can save thousands of dollars literally every year just by locking in these low interest rates. And the average price per square foot, so we can see that in December, it has jumped above 1,000. Last week, it was slightly lower than 1,000. So we're still at a very good number. So this shows stability in the home values. And comparing this December to last December, obviously it's way higher. So last December, we were at 900, probably 20 or 30. Now we're at 1,000, more than 1,000. So these numbers shows us that we certainly have a strong strong real estate market in San Mateo County, and it is definitely reflected also in Santa Clara County, in Silicon Valley. So we do have, again, a great sellers market. It's also a great time for buyers to buy. I know it's going to be challenging to get in contract. It is a multiple offer situation, but it's so worth it to save thousands of dollars every year for the lower interest rates. So these are the real estate market update, the most recent numbers and facts in the US in general and in San Mateo County. if you are interested to learn more about what's going on in San Francisco market, which is slightly different market, tune in and, in the next few minutes, and I will give you more information. I'll leave you now. Happy holidays, and please be safe.